Okay, so we are finally starting this. Okay, very warm welcome to all of you in this PM performance management webinar. Okay, now let me just quickly guide you the objective of this webinar, and then we can formally proceed. We usually conduct these webinars for almost all papers, like I conducted for my subjects. I teach MA Management Accounting, PM Performance Management, F8 Audit and Assurance, F9 Financial Management, P4 Advanced Financial Management. So I conduct these webinars every attempt for these papers, okay? And plus the other tutors of my college, they conducted for the other papers of their subjects expertise, like law, like taxation, like financial reporting, like SPR, okay? So the purpose of this is that one or two latest past exam questions are solved with you live in the class. One or two latest past exam questions, which we consider as tricky questions, they are solved with you live in the class, okay? So that once you solve them live with the tutor, you basically get some confidence as well, okay? Because the tutor is in front of you, and together with this, obviously, you would spend your 1.5 or 2 hours at this time, usually studying. So 2 past papers are solved. So this also adds back in your knowledge back, okay, that we have solved some questions as well, okay? I just stated one thing before starting this session, that usually during the session, there can be issues of connectivity lost, or maybe there is some problem from my side, so we are not able to communicate and this gets disconnected. So I have shared in the start of the class a WhatsApp group link of a WhatsApp group, right? You all are requested, I'm sharing it again in the chats, so please join it, so that if there is any disconnection between us, we can always communicate on WhatsApp, okay? So I've shared the group link again, please join it. Yes, recording for every session is available. It will be shared after the class is over. Sorry. So what I'm going to do is, as per my expectation, sometimes the questions in the exam are of tricky nature. So I will solve with you 2 past paper questions right with you in this class, so that the question is also solved. You get a fair idea of how things work. And according to me, these questions prove to be technical for the students, okay? So the first question which we are going to attempt is the Performance Management March-June 2021 exam, right? And this particular question, if you want, you can just visit Google as per my instructions. Write ACCA F5 or PM past papers. Okay, when you write on Google ACCA F5 PM past papers, there is the first tab, past exam library. You open this past exam library. In that past exam library, you get this sample March-June 2021. So you just open this March-June 2021, okay? This thing opens. So either you can see it on the screen or you can just follow it. So the first question which we are going to attempt is this examination question, March-June 2021 exam. Okay, I have opened it. Now I will open the question which we are going to do. Go down, it's the exam instruction screen. Leave it, the exam instruction screen. And this is the exam question which we are going to start. Okay. So March-June 2021 exam question. Okay. This is question number 1, which I'm going to read and then I'm going to solve it. Okay. So please pay attention. According to me, because I basically started teaching this paper when this paper was born, December 2007. That was the attempt. This paper was born December 2007. It's been 15 years I've been teaching that. So obviously I get a student feedback. So students found these questions a bit tricky. So this is the first question which we are going to do. Okay. Okay. The question is, the following scenario relates to 3 requirements. The following scenario relates to 3 requirements. This part of the scenario relates to requirements A and B. Now, this part of the scenario relates to requirements A and B. The question states, you can either open the question on your own devices or you can just see on my screen. Medical Temp Company, MTC, is one of the several agencies in Sectopia supplying medical staff, both nurses and doctors, under temporary weekly contracts to local hospitals. Okay. So Medical Temp Company, MTC, is one of several agencies in Sectopia supplying medical staff, both nurses and doctors, under temporary weekly contracts to hospitals. Okay. Information relating to size of market in Sectopia for the supply of medical staff is as follows. Now, this is the information regarding the size of market in Sectopia. Okay, so you see the size of market in Sectopia. The size of national market means overall, the whole country's market, for supply of temporary nurses. This is the size of national market for supply of temporary nurses. Q1 $14 million, Q2 $18.9 million. This is the size of national market. Okay. Size of national market for supply of temporary doctors. Now, there are 2 things: size of national market for nurses and size of national market for doctors. Now, the size of national market for doctors, Q1 is 8 million, Q2 is 8.2 million. Okay. So size of national market is given. You see, it's not the company. Medical Temp Company's data is not given. The size of national market, I hope you understand, the national market is the whole market. Like, for example, in Pakistan, I'm a mobile phone company. I'm able to sell 5,000 phones. But this is, I am not selling. National market, what is the overall market? That has to be huge. So this is the national market for nurses. Q1 14 million, Q2 18.9 million, and size of national market for temporary doctors. For temporary doctors, it's 8 million in Q1 and 8.2 million in Q2. Okay. The increase in national market for supply of temporary nurses is due to shortage of full-time nurses in Sectopia. You see, the national market of temporary nurses has increased too much, from 14 million to 18.9 million. The size of national market for temporary nurses has increased too much, 14 to 18.9. So it is saying the increase in national market for supply of temporary nurses is due to shortage of full-time nurses in Sectopia. Okay. All agencies in Sectopia, including MTC, charge a single market rate for supply of each type of staff. So all agencies in Sectopia, including this MTC medical temp company, charge a single market rate for supply of each type of staff. 1,000 for supplying a nurse and 2,000 for supplying a doctor. So all agencies charge a single market rate. 1,000 is the rate for nurse and 2,000 is the rate for doctor. In Q1, MTC is the medical temp company, held 30% of the market supply for temporary nurses and 40%. In Q1, MTC held 30% of the market for supply of nurses and 40% for supply of doctors. This is interesting. I need you to focus on this paragraph. All agencies in Sectopia, including MTC, charge a single market rate for supply of each type of staff. 1,000 for nurse and 2,000 for doctor. This is the standard market rate they are charging. In Q1, MTC held 30% of the market for supply of nurses. It's about Q1. 30% market for nurses and 40% for doctors. This is what is held by MTC medical temp company. What was the data above? That was the size of national market for nurses and doctors. Okay. But in Q1, MTC held 30% of the market for supply of nurses and 40% for supply of doctors. Okay. I think from this information, we have to first just write down some stuff so that things don't get mixed up. Okay. Okay, now please pay attention. The question is medical temp company and I am about to gather some data because it's a very important thing in the exam that you don't just rush on the information and read all the information. Whatever you are catching, just get it. Okay. So let's just get back to the question. Now, I will be recording some information. Medical temp company is one of the several agencies in Sectopia supplying medical staff. So MTC is an agency in Sectopia. Sectopia might be a country. It's supplying medical staff, both nurses and doctors, under temporary weekly contract to hospitals. The size of national market for supply of temporary nurses. The size of national market for supply of temporary nurses, okay, In quarter one, it's 14 million, and quarter two, it's 18.9 million. And size of national market for supply of temporary doctors, it's 8 million in quarter one and 8.2 million in quarter two. This is the size of the national market. So we can just grasp it that size of national market for nurses and size of national markets for doctors. Size of national market for nurses and size of national market for doctors is given. If I see the size of national market for nurses, quarter one, 14 million, 18.9 million, 8 million, 8.2 million. So quarter one is given in million. Okay. And for quarter two also, it's given in million. So it was 14 million and 18.9 million. It was 8 million and 8.2 million. Okay, just the copying of data, nothing else. This is the size of national market. Okay. The increase in national market for supply of temporary nurses due to shortage of full-time nurses. Okay. All agencies in Sectopia, including MTC, charge a single market rate for supply of each type of staff, 1,000 per week for nurse and 2,000 per week for doctor. So agencies charge a single market rate. What is the market rate? Okay, nurse 1,000 and doctors 2,000. Okay. Market rate, nurse market rate, doctor. Okay, so it's $1,000 and $2,000. Okay, this is the market rate for nurse and doctor given. Okay, I copied this information as well. In quarter one, MTC held 30% of market for nurses and 40% supply for doctors. This is a very interesting thing. Pay attention. MTCs. In quarter one, it's stating MTC held 30% share in nurses and 40% share in doctors. So MTC, medical temp companies, sales in quarter one for nurses and MTC sales doctors. Pay attention. I'm going back to the statement. In quarter one, it's only talking about quarter one, right? No information about quarter two. In quarter one, MTC held 30% of market for nurses. Now, what is the overall national market of nurses in quarter one? It's 14 million. What is the overall market of nurses in quarter one? It's 14 million. That's the national market. MTC held 30% of the market for nurses. So in quarter one, MTC's sales in nurses is going to be size of national market 14 million into 30%. 4.2 million. Okay. And for doctors, it states in Q1, MTC held 30% of market for supply of nurses and 40% for doctors. MTC sales for doctors in Q1 is national size 8 million, 40%. This is MTC sales. This is MTC sales. Now, I want you to be 100% clear with this point, because unless you are clear with this point, you won't be able to move forward. Okay. You see, Apple company, if it sells products in Pakistan, it has a national market of all the cities. I won't be having that whole market if I'm a supplier or a dealer or a shopkeeper. I will have a limited share. My sales would be limited from that. Let's suppose if the whole market is $100 billion, my sales would be 5 million, 6 million, 10 million, whatever share I get. So this is what it is stating in this question, that this is the size of national market for nurses. 14 million is the size of national whole country's market, and national market, whole country's market for doctors, 14 and 8. In Q1 MTC, this medical temp company had 30% of supply. So my sales would be just 30% of the whole market size and 40% for doctors. Okay. Okay. Are you clear with this point? I've not solved anything. I've just taken what the data is stating, that the size of national market is given, and MTC held 30% share. So its sales is going to be 30% and 40% for doctors in Q1, and market rate is 1,000 and 2,000. Then let's move forward. MTC uses quarterly rolling budgets. MTC uses quarterly rolling budgets. At the end of Q1, it prepares its budgeted revenues figures for Q2. Okay. MTC uses quarterly rolling budgets. At the end of Q1, it prepares its revenues for Q2. Okay, so at the end of Q1, MTC makes revenues for Q2. It bases these budgets on the assumption that the company would continue to maintain the market share it had in Q1. Pay attention. MTC, repeating this paragraph again, MTC uses quarterly rolling budgets. At the end of Q1, it prepares budgets for Q2. At the end of Q1, it prepares budgeted revenues for Q2. This is a very important paragraph as well. Please pay attention. It states that MTS uses quarterly rolling budgets. At the end of Q1, it prepares its budgeted revenue figures for Q2. Okay, at the end of Q1, we prepare budgeted revenues for Q2. It based these budgets on the assumption that the company would continue to maintain the market share it had in Q1. Okay. Budget for Q2. Okay, the question states, MTC uses quarterly rolling budgets. At the end of Q1, it prepared its budgeted revenue figures for Q2. So at the end of Q1, you prepare your budgeted revenue figures for Q2. It based these budgets figures on the assumption that the company would continue to maintain the market share it had in Q1. So at the end of Q1, you prepare your budgets for Q2. And the budgets are based on the assumption that the company would maintain the market share it had in Q1. So you prepare budgets for Q2 and you assume that the market share would be same as you had in Q1. That means the budget for Q2 is based on the assumption that you would have the same market share as in Q1. So the budget for Q2 for nurses would be the same as you had in Q1. That is 4.2. And for doctors, it's going to be the same as you had in Q1, 3.2. Okay. Again, this is also a very important point which you need to take care of, that the words are important in PM paper. MTC uses quarterly rolling budgets. At the end of Q1, it prepared its budgeted revenue figures for Q2. So at the end of Q1, you prepare your budgets for Q2. The budgets are based on the assumption that the company would have the same market share in Q1. So you are preparing budgets for Q2, assuming you will have the same market share as you had in Q1. So the budget for Q2 would be the same as you had in Q1, 4.2 and 3.2 for nurses and doctors. It also assumed that it would maintain its standard contribution margin of 80% for both nurses and doctors. So standard contribution margin will be 80% for both nurses and doctors. So standard contribution for nurses and standard contribution for doctors, it's gonna be 80%. So contribution is on price, right? So contribution is 80%, 0.8 of what? Of the price you are charging. So you are charging 1,000 for nurses, as you can see in cell B13, 800, and the contribution for doctors would be 80% of what the rate you are charging, 2,000. Okay, this is the data I have gathered from this first page. Okay, if you want, I can quickly recap it. Look at the opening paragraph. Medical Temp Company is one of the several agencies in Sticktopia. It's just an agency. It's supplying medical staff, both nurses and doctors, under temporary contract hospitals. Information regarding size of the market is as follows. Look at the size of the market. This is size of the national market, the whole country's market, 14, 18.9 in Q1, Q2. Size of national market for supply of temporary doctors is 8 and 8.2. This is the national market. The last two paragraphs are very key paragraphs from which I have extracted too much information. All agencies in Sticktopia, including MTC, charge a single market rate, 1,000 for nurse, 2,000 for doctor. I wrote 1,000 is the rate, 2,000 for doctor. Q1, MTC held 30% of the market for nurses, 40% for doctors. So in Q1, the MTC had 30% of the national market. So 30% of the national market means 0.3 of 14 million. And for doctors, 40% of the national market, 8 million. This is only for Q1. And then MTC uses rolling budgets. At the end of Q1, it prepares budgeted revenue figures for Q2. So at the end of Q1, we prepare budget for Q2. It based these budgets on the assumption that company would maintain the market share it had in Q1. This is a very important statement, that the budget of Q2 is prepared on the assumption that you will have the same market share as Q2. So budget for Q2 is on the assumption you will have the same market share as in Q1, 4.2 for nurses and 3.2 for doctors. And the contribution margin is 80%. It's 80% of the price, 800 and 1,600. Please use the chat box when I'm stopping, okay? Because in between there are so many messages and it's not possible to see the messages and explain as well. And Saf, with due respect, I told you that in the starting of the class, it's being recorded. So no one has the permission to record it again and reproduce it again. This is a basic thing of the lectures. I am recording. I will share it with you. Don't record it. Okay. Because sometimes the messages are coming in the WhatsApp group. Sometimes the messages are coming here. So it's not possible to focus and teach. Okay. Let's move forward with the question. Okay. MTC's actual figures for quarter 2 are. Now you are provided with actual figures of quarter 2. Now, if you look at the actual figures of quarter 2, actual revenue from nurses is 5.3 million. Actual revenue, this is for quarter 2, right? Revenue from doctors is 3.6, and contribution margin actual is 75%. Okay, I will just write this information as well. This is for quarter 2, right? Actual sales for nurses and doctors is 5.3 million, 3.6 million. Okay, this is actual sales for quarter 2. I don't have information about quarter 1. That's only for quarter. Okay. And contribution margin actually 75%. Now, this part of the scenario relates to requirement C. So it's stating that this part relates to requirement C. In requirement C, there's information about some company as cheat company. The market size and market share variances have also been calculated for quarter 2 for one of MTC's competitors, cheat company. These variances are as follows. So market size and market share for cheat company, a competitor, has been calculated. For nurses, it's 185 adverse. For doctor, it's 724 adverse, total 909 adverse. And market share variance is 1065 favorable, 1043 favorable. For nurses, doctors, 2108 favorable. Cheat holds the same percentage of each market as MPDC. Cheat is holding the same percentage. It also uses rolling budgets, prepares its budgeted revenue figures using exactly the same assumptions as MTC. However, when cheat company's sales director had to provide the market size figures for quarter 2 to the accounts department, he deliberately reported these figures 30% lower by excluding the market segment relating to maternity units. The accounts department were unaware of this. So in cheat company, there is some cheating going on. I will focus on that later when we will solve this part. Okay. Now the requirements are coming. Okay. Let's focus on the requirements now, but you know that there are 3 requirements, A, B, and C for 20 marks. Okay. So I think if you go back to the question, this part of the scenario relates to requirements A and B. So first, let's focus on A and B. This part relates to A and B. So just first focus on A and B. I have gathered the data of A and B that MTC supplies nurses and doctors. Size of national market is given for quarter 1, 14 million, for quarter 2, 18.9 million. This is the size of national market. This is the size of national market, whole market for quarter 1, quarter 2, and national market for doctors is 8 and 8.2. So I just wrote it. You can see that the size of national market for quarter 1 and quarter 2 was given. Okay. Then it stated that all agencies charge a single market rate, 1,000 for nurse, 2,000 for doctor. I wrote it here that the market rate for nurse and market rate for doctor is 1,000 and 2,000. Okay. Then it stated that in quarter 1, MTC held 30% of the market of nurses and 40% for doctors. So MTC's market was 30%. It's obviously the national market for nurses and 40% for doctors. So I did this, and this is MTC sales for nurses and doctors in quarter 1. Okay. Then it stated MTC uses quarterly lowering budgets. At the end of quarter 1, it prepared its budgeted revenue figures for quarter 2. It based these budgets on the assumption that the company would maintain the same market share as it had in quarter 1. So budgets for quarter 2 were made on the assumption that company will have the same market as quarter 1. So the budgets for quarter 2 for nurses and doctors are going to be same as quarter 1. I wrote same 4.2 and 3.2 million. Okay. And Contribution margin is 80% for nurses and doctors. So contribution for nurses and doctors is 80% of the market rates. Contribution is always on price. Okay. And finally, actual figures for Q2 are given. There is part A and B ends because the next requirement is for part C. Actual revenue of Q2. Remember, this is for Q2. You again need to be carefully assessing that whether thing belongs to Q1 or Q2. So for Q1 and Q2, thing is that Q2 actual figures are nurses 5.3 and doctors 3.6. So I wrote the actual sales for Q2 as well. Okay, this is the data. Leave the data for part C. We will discuss it when we are solving part C. Let's move towards part A. Explain why businesses calculate market size and market share variance. Why business calculate market size and market share variance. Okay. Obviously, I will discuss the answer with you, but it is advisable you read the examiner's answer as well, because I will explain here in sketches. We don't have time waste for typing. Okay, I will discuss here in sketches and you can then read the examiner answer. Explain why businesses calculate market size and market share. Now, assuming that you are taking this webinar after preparation, because these webinars are very close to the exam, there are hardly 10-12 days left in the exam. So you have to be prepared. If you recall your preparation, why businesses calculate market size and market share variance, you know that we have a variance with the name of sales volume variance, right? Sales volume variance is split into two parts. One is called sales volume planning variance, and one is called sales volume operational variance. This sales volume planning variance is called market size variance, and this sales volume operational variance is called market share variance. As your knowledge might be stating you that every variance is split into planning and operational. The material price variance is split into planning, operational. Material usage variance is split into planning and operational. Labor variance is split into planning, operation. Sales price variance is split into planning, operation. But when you talk about sales volume variance is split into planning and operational, sales volume planning, sales volume operational. This sales volume planning variance is called market size variance, and this sales volume operational variance is called market share variance. Like, if I guide you this in detail, because I will be using this for the next part as well. Okay. If you just talk about sales volume variance. Okay. So you might have learned in your studies that the formula of sales volume variance is standard contribution per unit into standard sale unit minus actual sale unit, right? This is what the formula of sales volume variance used to be, even in our previous studies and even in this. Sales volume variance is standard contribution per unit into standard sales units minus actual sales units, right? When you break it into planning and operational variance, like sales volume variance is split into sales volume planning variance, which is also called market size variance. Okay. And this is also split into sales volume operational variance called market share variance. Okay, so this planning variance is split into two parts. Sorry, sales volume variance is split into two parts: sales volume planning variance called market size and sales volume operational variance called market share. Okay, if you are calculating sales volume planning variance like SVPV, what you do is all actual figures are replaced with revised standard, or actual figures are replaced with revised standard. Like standard contribution per unit remains the same, standard sale unit remain the same, but in place of actual sales units comes revised standard sale unit. Okay, but when you are calculating sales volume operational variance, also called market share variance, okay, what you used to do is all standard things get replaced by revised standard. All standard things get replaced by revised standard, like standard contribution per unit becomes revised standard contribution per unit. Standard sales units becomes revised standard sale unit, and actual sales units remain at their place. Okay, so this is what you might have studied and what you should have studied in your market size, market share working, that this is a variance called sales volume variance, standard contribution per unit into standard sales units minus actual sales units. It's split into two parts: sales volume planning and sales volume operational. When you split it into planning, it's called market size. When you split it into operational, it's called market share. Okay, the technique is that when you are making sales volume planning, everything remains same. Actual gets replaced by revised standard. So you see, I copied standard contribution same, standard sales unit same, but actual sales units got replaced by revised standard sale unit. Okay, but if you are calculating sales volume operational, revised standard contribution per unit, it's revised standard sales units and actual sales units. Why? Because actual remains the same, standard gets replaced by revised standard. Now the question was not regarding calculation at the moment. The question was not regarding calculation at the moment. Okay, the question stated, explain why businesses calculate market size and market share. In short, it is asking why businesses break variance into planning and operational. Market size, market share is planning, operational. So why businesses calculate market size, market share? That means why businesses split a variance into planning and operational. Okay, this answer which I'm telling and which the examiner will tell you, this applies to any question like this. Like the question comes, why businesses calculate material price planning and material price operational? Same answer. Why businesses calculate labor rate planning and labor rate operational? Same answer. Why businesses calculate sales price planning, sales price operational? Same answer. Why businesses calculate labor efficiency planning, labor efficiency operational? Same answer. Why businesses calculate market size, sales volume planning, and market share, sales volume operational? Same answer. Why businesses calculate planning and operational rates? The businesses answer of 4 marks is that the businesses calculate planning and operational, market size and market share, also called planning and operational, just for fair performance measurement of managers. That's the principal central idea, that businesses calculate any planning operational variance for fair performance measurement. You see, historically, a thing used to be that any variance calculated, we say that if any variance is calculated and it's adverse, it is a general tendency that obviously it's manager's fault. Businesses calculate planning and operational variance just to split variances into controllable and uncontrollable factors. That's the reason for fair performance measurement, that businesses calculate planning and operational to split variance into controllable and uncontrollable factors, Remember, operational variance is controllable for the manager. He can be blamed for that. But planning variance is uncontrollable for the manager. It arises due to external factors, uncontrollable factors, or faulty planning of seniors. It's never controllable for the manager. So if you just find the variance, like sales volume variance or material price variance, you just calculate the variance and you blame manager for that variance, that will be unfair for him, because he is being held responsible for the factors which are not in control. So the strategy is, whenever a variance is calculated, always variance should be broken into two parts: planning, operational. In here, it's size and shear. To get to know which portion is uncontrollable, the size planning one, manager should not be blamed for that. And operational, shear variance, manager is controllable for that, responsible for that, so that we can assess the performance on a fair basis. Okay, this was what was supposed to come in this requirement. Part B, calculate the market size, planning variance and market share operational. See, it's giving the names. Calculate the market size, planning and market share operational variance for MTC for Q2. Now you need to calculate market size and market share, planning and operational variance for Q2. Okay, market size and market share for Q2. Let's start. Let us start. Market size and market share we have to calculate for Q2. Market size and market share we have to calculate for Q2. Okay, we have to calculate market size and market share variance for Q2. Now, in order to start anything regarding market size and market share variance for Q2, it is important Okay. Now, in order to calculate market size and market share variance, obviously you need to have data. Okay. And data is required for three things. Data is required for three things. Okay. One thing, what you would be needing is a standard sale unit. Okay. It's only for Q2, right? Then you will be needing actual sale unit. Okay. And then you will be needing revised standard sale unit. How would we know that? I have seen the formula that in order to calculate these variances, as per the formula, we need three things: standard sales units, actual sales units and revised standard sales units. So I want you to pay attention on how I'm getting all these things: standard sales units, actual sales units, revised standard sales units. And we need them for nurses as well as doctors. Okay, we need them for nurses as well as doctors. Okay, the standard sales units, the actual sales units, and the revised standard sales units. And we are computing this for quarter 2. Now, actual sales units is very easy, and standard sales units is very easy for quarter 2. Standard is budget. Standard is budget. Okay. So remember, for nurses, when you are setting budget for quarter 2, for nurses, when you are setting budget for quarter 2, the quarter 2 budget for nurses was same as quarter 1, 4.2 million, and for doctors it's 3.2 million. Okay, the quarter one budget, it's stated that you prepare budgets for quarter 2 and rolling budgets on the assumption that the things remain same as quarter 1. So the quarter 2 budgets standard for nurses and doctors, it's given. It's 4.2 million for nurses and 3.2 million for doctors. This is the standard sales units. Okay, but the problem is this 4.2 and 3.2 million is dollar. This 4.2 and 3.2 million is dollar, right? This is not the units, this is the dollar. Okay, so dollar can easily be converted into units, like it's 4.2 million. The budget for quarter 2 for nurses is 4.2 million. That means it's $4,200,000. That is the dollars. You just divided by the selling price for nurses. So the selling price for nurses, the rate for nurses was 1,000. Okay, so standard sales units is 4,200, and for doctors, the budget of quarter 2 was the same as quarter 1, 3.2 million. That is 3,200,000, 3.2 million divided by the selling price, which was 2,000. Standard sales units came for nurses and doctors. Okay. For quarter 2, the quarter 2 budget was based on the assumption that the things would remain same as quarter 1. So quarter 2 was 4.2 million and 3.2 million. Okay, so that means the budget or standard is given, but it's revenue given. You need in units, because as per the formula you need units. So divided by the selling price, you get the units. It's 1,000 and 2,000. Actual sales units for quarter 2 is also given. You see the actual for the actual is also given for quarter 2. If you see for quarter 2, the actual data is for nurses 5.3 million. This is the dollar, 5,300,000. You need units, just divided by the selling price of nurses. It's 1,000. And for doctors, it's 3.6 million, 3,600,000. Divided by selling price of doctors, it's 2,000. Okay. You just need one thing: revised standard sales units. Okay, now how do you get the revised standard sales units? You see that this was your budget for quarter 2, nurses and doctors, but the national market was 14.8 million. Do you think if the size of national market has changed to 18.9 million and 8.2 million, your budget should also change for quarter 2? A big yes. You maintained the share of 30% in quarter 1, 30% of the national market. So if the national market has grown to 18.9, your budget should also change 30% of now, not 14 million, now 18.9 million. Okay. And your budget for doctors was 40% of 8 million. Now, if the doctor size has grown to 8.2 million, your budget should also be 40% of 3.28. Okay, So revised standard sales units, since the market size overall has changed, my budget of quarter two should also change. Revised standard sales units, the revised is nurses 5.67 million for quarter two. 5.67 million means $5,670,000. But your units divide by selling price 1,000, you get units. And for it, it's 3.28 million. 3,280,000. Selling price 2,000 to get units. 1,640. This is what you have gathered as standard sales units, actual sales units, and revised standard sales units. Okay, this was the most important thing which we need. And once we get it, see how easy things are now for you. See how easy things are now for you. Let's find the sales volume planning variances for nurses and the sales volume planning variance for doctors. Sales volume planning variance for nurses and doctors. Let's apply the formula. Standard contribution per unit. Already calculated that the standard contribution per unit for nurses is 800. Okay, so where is it? You can see contribution for nurses is 800 and for doctors it's 1600. So standard contribution per unit for nurses, it's 800 into standard sales units for nurses, it's 4,200 minus the revised standard sales units for nurses is 5,670. Okay. You get this variance. I'm not putting the equal to sign to show you the working full. So 1,176,000. And since the standard sales units were 4,200, but in revised we are selling more, it's going to be favorable. And for doctors, the standard contribution per unit was 1,600. For doctors, as you can see, the standard sales units are 1,600 and the revised sales units are 1,640. This makes it 64,000. Again, the revised units are more favorable. Okay. And as far as you count upon the sales volume operational variance for nurses and doctors, for nurses, the sales volume operational is revised standard contribution per unit. Was there any information that the contribution is changing in the question? No. So the revised contribution is also going to be 800 because the contribution is not changing. Revised standard sales units, you can see 5,670. Actual sales units of nurses, you can see 5,300. Okay. This makes it 296,000. And since the actual units are less than standard sales units, this is going to be adverse. And for doctors, the revised contribution is the same because it hasn't changed, 1,600. And revised standard sales units for doctors, it's 1,640. And actual, it's 1,800. So since actual are more, it's going to be favorable. 256,000. You got 10 marks through this. So standard sales units, the budgeted units was given, the revenue was given, I just divided by the selling price. Actual was also given, I just divide by selling price. For revised, if the quarter two's national market has changed, you should revise your standard. Okay, you can copy it. If you have any questions, you can please ask. Mars, the revised units are the same, 30% and 40% of the national market size, like you computed the standard units. But in Q2, the national market has changed. It has become 18.9 and 8.2 million. So that's why we need to change them. You can copy all the data if you want. Yes, Vakas, it will be shared on the group, and the WhatsApp group link I have shared with you again. You can please join it. Okay, now let's move towards part C of this question. It's a 6-mark requirement. Discuss the actions of the sales director at cheat company and how this may have impacted in the variances which he have calculated. Now there are 2 parts. Discuss the actions of the sales director at cheat. You need to explain the actions of the sales director at cheat and how this may have impacted on the variance, how they affect the variances. Actions of the sales director at cheat, and how this may have impacted the variances which have been calculated. Okay. You know that for part C, there was a separate data. This part of the scenario relates to requirement C. This part of the scenario relates to requirement C. So on part C, 6 marks, that's only the case. The market size and market share, that is planning operation, have also been calculated for Q2 for one of MTC's competitors, cheat company. Cheat company is a competitor of MTC. You have calculated the market size and market share for Q2. These are as follows. Market size, that is planning, uncontrollable. For nurses, it's 185 adverse, and for doctors, it's 724 adverse. Total is 909 adverse. And market share, that is operational, controllable. It's 1065 favorable. Nurses, 1043 favorable. For doctors, 2108 favorable. That means the operational variance, which was controllable, is 2108 favorable, and the manager would be rewarded. Oh, you have got so much operational variances which were in your control, 2108 favorable. That's very nice. Cheat company holds the same percentage for each market as MTC. It has the same market. It also uses rolling budgets, prepares its budgeted revenue figures using exactly the same assumptions as MTC. Everything is same. However, when Cheat sales director had provided the market size figures for Q2 to the accounts department, he deliberately reported these figures 30% lower. So when Cheat sales director provided the figures of Q2 to accounts department, he deliberately reported the figures 30% lower. The accounts department were unaware of this. So what has the sales director done? Okay, he reported the market size figures 30% lower. Very easy question. Discuss the actions of the sales director cheat, how this may have impacted on the variances. Now, let's suppose my sales, just to explain you, my sales were supposed to be 1,000. If my sales are supposed to be 1,000, how much should I report to the accounts department? 1,000. What did the sales director do? He deliberately reported these figures 30% lower. He reported to the accounts department that the sales are going to be 700. Sales were supposed to be 1,000. So you should have reported to the accounts department that sales are going to be 1,000. You reported them deliberately, intentionally 30% lower. That's going to be 700. Now let's suppose actually our sales came 950. Now, had you provided them the correct budget of 1,000, had you provided them the correct budget of 1,000, and the sales came 950, your variance was supposed to be 50 adverse. But you deliberately reported the figures 30% less. You said the sales are going to be 700. Now the actual sales are 950. Your variance is going to be artificially favorable and you will be rewarded. So the actions of sales director at cheat company are highly unethical and immoral. Because if sales are 1,000, I should report 1,000 and I get 950, my variance would have been adverse. I would have been punished. But I intentionally reported my sales 30% lower, 700. My actual sales came 950. I was rewarded. So the actions are highly unethical and immoral. This will result in unfair performance measurement. He will get a reward unfairly. And this may have impacted variances favorably because the variances would have come favorable and no one would get a catch that why the variances are favorable. Everybody would think that the manager has done a great job. Okay, so this what you can write. However, let me tell you one thing. It's better to always read the answers from the examiner area. So you can see that if you just put a general discussion, if you can see, just a summary, the sales director at Cheat has deliberately manipulated the figures. The behavior is unethical, may well lead to sales director getting a bonus which he does not deserve. As a consequence, the sales director's performance looks really good, but the reality is that it only looks high because the sales figure include revenue for materials rather do not. This does not reflect the director's real performance. Okay, so the summary is the same which I told you. Okay. Any questions with respect to this question, please? You can ask. Tisha, when you are commenting on something, it's not necessary that what the examiner has done, you should write as a copy of that. There is no need to calculate the figures, nothing. I gave you some dummy figures.